What's up, everyone? My name is Ali. Welcome back to my world of stocks, and welcome back to my series called Stocks My Viewers Want Me to Look At, where I pick a stock that you guys mentioned down in the comment section. I do a really quick review video of it, and I share with you my opinion and thoughts, basically let you know if I would consider buying that stock myself. Now, this is actually our fourth episode, so I'll leave you a link to the playlist down below in case you want to see past episodes. But this time, our question comes from Snake215, who says, Airbnb, please. They have a trusted and popular brand, and they make money from both sides of the market, people renting a home and people listing their home. I think they will always be number one in the market. What is your opinion? Thanks. Okay, so great question. And by the way, I actually choose longer comments like this because I like to hear what you guys have to say about a stock, why you want me to review it, and what your feelings are on it before I review it. Rather than someone just leaving like a one-word comment saying like AMD stock. I want to know why you want to review video of AMD or some other stock. So make sure you do leave a little more detailed comment if you do want it to be featured on a future video. But with that said, today's episode will be about Airbnb. Now, this is a stock that I am fairly familiar with, but I do not currently own it myself. However, I do think that Snake here made a great point about it, and the stock is also currently down a lot from the tops, lost about half its value. So let's see if this would be a good time to be picking up this stock on the dip. All right, well, first, just a quick little background on the company. Airbnb is essentially an alternative to hotels, but rather than owning the properties themselves, they just let regular people like you and me list our homes for rent on their online platform, where travelers and renters can go on the Airbnb app and find a home to rent. And like Snake said, Airbnb is able to monetize both customers by charging a fee on both the host as well as the renter. And the platform is actually very attractive to both sides because homeowners can earn extra income by renting their place out, which is very profitable since they don't have the same type of overhead as giant hotels and resorts that have to pay for staff and large buildings and maintenance and all the resort style luxuries that they need to have in order to attract customers, like pools and gyms and all that kind of stuff. But instead, they can just rent out a spare room or even a whole house or apartment that they're not currently using. And renters love Airbnb for the convenience and the experience. You might find a house right next to the place you want to visit, usually for an affordable price, especially if you have a lot of guests with you to split the cost, which we'll talk more about in just a second when we compare it to hotels. But on top of that, you may even get access to a full-size kitchen or an entire home, which is great for an entire trip with your whole family or friends. It makes it all much more enjoyable. Plus, you might even want to stay at a unique listing that is specific to the area. For example, Airbnb hosts literally tens of thousands of cabins, farms, tiny homes, boats, castles, yurts, tree houses, lighthouses, igloos, and even private islands every single year. And many of the places on Airbnb even have unique experiences, which is a relatively new feature that they've added, where the host can do bonus things for you, like give you a tour of the city or teach you how to cook a certain cultural dish of the area, or do some type of art class, or really any other type of activity that is unique or special to that listing, and usually obviously for an added fee. There are, however, some big cons to staying at Airbnbs, which we'll cover in just a second, but so far it has been a winning combination for them, as they've been able to grow their reach to over 220 countries worldwide, already generating more than half of all their sales outside of the US. They've grown their user base to over 200 million people using the platform every year, and in just 4 years' time, they nearly tripled their annual bookings from 100 million up to a whopping 300 million per year as well. As a result, they've been slowly stealing market share from hotels and other venues, growing their sales by pretty large amounts every year, except for 2020, of course, where the pandemic resulted in much less travel, and thus Airbnb's really weren't needed as much, which sent their sales falling by almost 30%. But since then, they've recovered strongly to a new record high of $8.4 billion last year, with growth of 76% in 2021 and still a very strong 40% growth last year as well. Meanwhile, their opportunities for the future are still looking very bright too, since their user base is very young and growing. In fact, over 60% of users are millennials, so clearly it's a popular option among young renters and travelers, and that's of course a user base that can grow much larger and really snowball over time. But even for hosts, we're seeing more and more people join on to list their homes, since it can generate so much additional income for them, as Airbnb only charges around a 3% fee to list your home on the platform. The rest is straight profit that goes into your pocket, and per year the average host makes around $10,000, which is pretty high considering that many of them are only renting out a piece of their home for a short period of time that they weren't even really using anyway. But up to 2020, it's already totaled over $110 billion generated by hosts, and we now see over 14,000 new hosts wanting to join the platform every single month, which is pretty crazy, having now surpassed over 4 million hosts in total. If this trend continues, Airbnb could have a gigantic user base to continue monetizing for many years to come. And it's one of the reasons why they estimated in their IPO prospectus that their total addressable market could be worth over $3.4 trillion with a T. For context, that's more than 400 times larger than the sales that they did last year. Obviously, a giant part of that market is going to be hotels and other travel and hospitality related companies, which I'll talk more about in just a second. But the point is that if Airbnb can keep growing and stealing market share and expanding their reach further, especially with younger users that keep coming onto the platform, then you could be talking about a ton of long-term growth opportunity here. And yet when looking at the stock, it's actually crashed by over 40% from the top, leaving it now trading right near the same price it IPO'd at back in 2020. So with all of this in mind, this has to be a screaming buy on the dip, right? Well, in my opinion, this is where all the good news and the positives mostly end. First of all, that total addressable market is, in my opinion, way beyond reach. Hotels are still a giant part of the travel and hospitality industry, and I don't see them ever going away. Because despite their massive overhead, hotels can actually be cheaper at times depending on the group size, the length of stay, and the amenities. In general, longer stays with large groups will be cheaper on Airbnb, but if it's a short stay with only 1 or 2 people, then a hotel actually has a cheaper median price per person of $89 versus $125 for an Airbnb according to NerdWallet. However, if you bump up the size to 6 adults, then the price for an Airbnb falls all the way down to just $60 per person, and that's where it's more attractive. And obviously, there's going to be all sorts of other factors to consider, like the location and the convenience and the amenities and all that sort of stuff. But just in general, hotels still serve a very important function in the travel market and especially cater very well to just 1 or 2 travelers at a time. So, in my opinion, hotels are not likely to disappear anytime soon. And honestly, some people just prefer hotels. Some people don't want to rent, someone else's house. Some people like to go and be kind of pampered at a hotel. That's also another thing to consider too. But guys, much more important than any of this is that there isn't really much of a barrier to entry for Airbnb's specific market to begin with. Like, what's to stop any other company from just launching their own app that connects homeowners to travelers and renters, and maybe even offers it for cheaper fees or a lower price? There really isn't any wall there. And that's why when you look at Airbnb's competition, it's actually pretty darn competitive. Currently, it's estimated that Airbnb holds a very strong about a quarter of their current specific market share, but they're not even number one. That would be Booking Holdings, who controls almost 35% just with their Booking.com site alone, and that share gets even larger when you include their subsidiaries in Priceline and Kayak as well. But it doesn't stop there. There's also other huge players like Hopper at over 7%, and Expedia Group, who not only owns Expedia at also over 7%, but when you include their other sites like VRBO, Hotels.com, and Trivago, they actually get to almost the same market share as Airbnb. And guys, this is not a small issue because we're already seeing the effects of such a largely saturated market as Airbnb's revenue growth is slowing down to just around 15% going forward. That's like less than half the typical growth that they were used to seeing before this. And sure, a lot of that is probably due to the horrible macro economy that we're in right now. But at the same time, people are listing new Airbnbs so frequently that it's hard to imagine their growth taking such a big hit, especially with how big they claim that their total addressable market is. And look, the stock is down a huge amount, almost half its value from the top. So I totally understand why it looks attractive right now and may actually be worth taking a shot on. But even with that huge crash, that valuation is still pretty expensive at a PE ratio that is 1 to 200% higher than the sector median. Granted, they just recently started turning a profit last year, so if they're able to maintain that profitability and grow it at some large rates, they just started being profitable, you might be able to grow at some big rates, then that valuation can at least come down fairly quickly. In fact, their earnings per share are expected to climb by close to 20% in future years. And I've actually seen estimates that are a lot higher than that. And even that alone, though, just close to 20% is around 70%, more than 70% higher than the sector. So they actually have very good EPS growth. But even when you factor that in, their future price to earnings to growth ratio is still about 30% more expensive than the sector regardless. So I just think that what you're left with here is a very exciting and disruptive company with a lot of future potential. But in my opinion, I do feel that it's priced almost to perfection, or at the very least, to where they can't really make too many mistakes. I don't think that it's a bad stock. I actually think most people will have success with it. And I think it can be a high flyer once again because of all the market opportunity for growth in the future. But I just think that there are better, safer options out there in the market with just as much potential. And as much as my gut tells me that I should probably be buying this one, I just can't get over the fact that I don't really see much of a barrier to entry here. And I ultimately feel that consumers are always going to want to choose whatever is the cheapest option out there with the lowest fees. So I see it relatively easy for a competitor to come in and just kind of undercut them on price and be able to steal market share from them, which puts pricing pressure on their margins and hurts their profitability because they're also going to have to spend a lot on advertising to compete with all of this competition in a saturated market. So it's going to be a pass for me, unfortunately. I do like it. I wish I could buy it, but I just feel like it's a little too risky, and I already own too many risky stocks as it is. I don't feel that I have the time and the energy to be tracking this one as intensely as I probably will have to. So I'm gonna stick to something that is a little bit safer and put my money in other stocks that I have a little more faith in for the future. But what do you guys think? I'd love to hear your thoughts. These are just my opinions, guys. I'd love to hear what you guys have to say. Do you like this stock? Do you own it? If so, why? And if not, why not? I'd love to hear your thoughts, but leave them down below in the comment section. And I hope you're all doing well. Now we'll catch you in the next video, my friends. Thanks again for stopping by. Take care. Bye-bye.